What's up, everybody? This is Jimmy with Decoded. It is February 20th, 2025. And, well, the market's still alive and well. It's bleeding quite a bit today, but hey, it doesn't matter. We make money both ways. Now, with that said, I did record the first 5 minutes of pre-market, but I'll spare you the having to watch that. The fact of the matter is today, the chart looked like total shit. In the morning, there was no volume, therefore low volatility expectation. There was a very small expected range today. So quite frankly, I did not put any call put lines on the chart simply because, well, I didn't feel comfortable playing calls or puts aggressively anyway. And therefore, I got to be patient Jimmy today, which is very, very difficult for me to do. And I'm going to show you everything that we saw, and I will let you listen to what I wanted to see for the setup on the trade I ultimately took, because I think you should know that it is possible to prepare yourself to be ready for a trade, and you just got to convince yourself to execute based on your criteria. And you're either going to make money or you're not. But the fact of the matter is you can see setups before they're actual setups. And before we get into the charts, I'm going to ask you to consider buying my book. Here's what it looks like. I know you're tired of hearing it, but it's a very helpful book. And if you do buy it and you read it, I hope you enjoyed it. Please leave me a review, kindly, on Amazon. Now, without much more yippity-yappities, let's go ahead and take a look at what trades we found and why. Very quickly, I'm trying to make these videos a bit shorter for you guys. I had told everybody while we were right before open, I said I wouldn't be really entertaining any puts for my Qs traders unless we were able to breach. I said breach this 538.23 line. If we did that, we'd be hoping at least for a move down to the blue line. Wasn't a huge move. It was quick. You had to be ready. But that's why that is there. I did not take that trade. And then ADD was running to the upside, which kind of kept SPY moving sideways. Was not a good day to play the open aggressively. Qs ended up finding some support near our blue line here and started to put in higher lows. Now, I don't buy puts when there's higher lows. And I explained to everybody that I would need to be above 539.02 before I would justify calls. So, yeah. But I'm going to let you guys listen to the audio clip of the requirements that I would want to see in order to justify puts so that you can hear before this happens exactly. I'll tell you first, in case you don't want to listen to the 30 seconds of audio from the actual situation. I said, I want Qs, or SPY rather, crossing 611.06, so our first orange line low. I want Qs cracking, meaning just breaching this trend line, and I want ADD printing red. Okay, I had puts ready. I was ready to go. I just needed the reason to take it. Now, so for me, what I'm looking for is SPY to be below this orange line here, or through it, Qs breaking this trend line, and ADD printing red. That's what I'd like to see, because that would be, well, something that I would consider confluence. We cracked that line, and everything else was true that I wanted to see. I jumped into those puts. Now, all I was looking for was the Qs to make it from here down to this support here. And as you could see, well, it made it a lot farther than that. But did Jimmy take advantage of that entire move? No, he sure didn't. I stopped out of this trade for much less than what I thought it was going to be. But again, I bought it quickly. I marketed it in, so I didn't get the greatest fill. This was only a 10% win for me, which allowed me to meet my criteria, or my daily goal. But then to watch what happened after is heartbreaking, because obviously I left about 300 to 400% money on the table. And that's frustrating. But I was happy to be done with today because I had psyched myself out this morning based on what I was seeing. I felt lucky to have managed to make money. I didn't know if this was going to be the move of the day. Obviously, it turned out to be the move of the day. But guys, at the end of the day, I didn't like the chart I was about to take a trade in. It met the criteria that I did like. I didn't want to hang out in the water too long with the sharks. That's it. Now, obviously, I robbed myself of a ton. This could have been an outstandingly, ridiculously profitable day. Instead, I just cleared my daily goal, slightly above it, but I didn't even get into the 4-figure range. But fortunately for many of our traders in our group, they did, and I am super happy for them. Now, as this trade continued to go down, every circle that you see on the SPY chart is a result of hitting major levels of support either on the Qs or on the SPY chart. But ADD maintained its trend to the downside. So as long as we were closing below support levels, we were expecting the next support level in line to get hit. And you could see this all the way down. Now, Jimmy, I missed that. When do I get an opportunity to potentially get into a trade? Well, one of our members asked that very question right here around 9:54. And I said, well, you want to pull back to resistance on both charts. This is our normal rules, guys. Pull back to resistance on both charts. And as long as ADD is printing red, that's the time to go. Now, that also makes this area here a lower high. So we're expecting the support to fail, not hold because of the lower high. And fail it did. And we went down, 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 down. So another huge opportunity to make good money. And again, guys, we don't know how big these moves are going to be. Nobody knows, right? But if you happen to get in because certain criteria work, or certain criteria are met, then you get into the trade. Whether you stay in that trade to catch more of the move or not is based on your trade plan, okay? My plan was to go from one spot to another. I felt like my plan had been achieved, so I took myself out of the trade. Now, I was very excited when this happened because it turned into a very quick move. Unfortunately, it didn't pay as much as I thought it would. And panic sold out. It wasn't even panic. Excitement sold out because everything I was looking for and planned to happen, happened. And I just reacted. Now, with that said, under normal circumstances, this would be a trade that had every reason to stay in it. Number one, we closed below support. So we're expecting to move down to the next support. Number two, we had ADD clearly moving in our direction. There was absolutely no good reason for me other than just sheer emotion and excitement to get out of that trade. So yes, I'm a little bit regretful that I did. Still made money, so I can't be upset. But man, the thought of if I would have just followed my normal rules for reasonings to stay in these trades, I could have captured a 400% win. But hey, life goes on, right? For most of us, hopefully. And then we hit support that we couldn't successfully stay below. We move up. Now this is just a pullback. I wasn't recommending any entries here or suggesting any entries there, even though we were only pulling back to a level of resistance. They were on both charts, but that was a very aggressive move back to the upside. And then on the way down, we did have people buy there. I was not one of them. I was done for the day. We came back down. We created a higher low. Okay, now it was at this time right here that I told people who were still holding on to puts from down here, I said, guys, if we put in a higher low on our way back down to the support, if we don't make it back down to this support, and I said at 10:08, this is potentially becoming a higher low. We can't know until the next candle closes. This became the higher low. We found a support here, and then we started to move up. Guys, if you're holding on to puts, either whether you entered here or you got them way up here and you made it here and you're just hoping it comes back, this right here is a bad sign for puts, okay? I make this abundantly clear. Day in and day out, you have to listen. You've got to trust this particular rule. It works so often, okay? Higher lows are bad for puts. So if you're in them, consider getting out. If you're looking to get into puts or recently got into puts and we put in higher lows, get out. If you're wanting to buy puts at a resistance level coming off of higher lows, don't do it. Don't do it. It's my recommendation to you. Okay. Trust me, it'll save you often. And because of higher lows, we expect resistance to fail, not hold, and fail it did. And we were expecting it to get from this resistance up to this resistance. And if it got through that, we were hoping for at least the pink line, although it never made it there. So we weren't looking for calls either. Pull back, another higher low. And in this case, it did break resistance, but it didn't make it as high as the next resistance. Fine. And we start to rotate down. Now, our normal rules for going from calls to puts or puts to calls is, number one, we want to break the trend line. That not only takes calls off the table, but it also puts puts potentially on the table. Now, the further part of that rule is we want to take out the most recent support that exists after taking out the trend line. That was here. So we closed below that line. What we were expecting is the Qs to ultimately make it down to this line. If they close below that, we're looking for this line. And if they close below that, we're looking for this line. And just like clockwork, with the help of ADD, all of those things came true. We closed below support, we pulled back, put in a lower high. That was good feeling for people who were in this trade. And we ultimately made it down to our first target. We closed below that first target, the very second candle. If you got out, great. If you didn't, you stayed in because ADD was still trending down. Whatever the case is, awesome. You made extra money. I'm not going to continue to go over these things, guys. It works like clockwork until it doesn't, right? So ultimately, we hit a support down here that held, just like it did over here. And we start to move up. And what do we see here? Another higher low. We recognize that. Well, what does higher low mean? It means we're likely to break resistance, and then we're more likely to run up to the next resistance. Now, guys, I say these things minutes before they happen, just preparing people, whether they want to take a trade, whether they need to get out of a trade, whether they want to learn how to spot these trades. It happens constantly. Higher lows, bad for puts. So don't buy puts at this resistance. If you want to buy calls, we're more likely to break resistance and head up to the next resistance. This was a nice, clean trade with all the rules. Sorry, I didn't mark them equally here on SPY, but all the rules are being followed. Higher lows, more likely to break resistance. If we do, where is the next resistance up? It was all the way up here. And that's where we got. And if you waited till then, you got to make the most money it was willing to give you. After that, there was nothing left to trade. And we started to move sideways. The chart got really slow. And I was done for the day. These fine folks of our community allowed me to get out of the chat room about 30 minutes early today, 25 minutes. So I appreciate that, guys. But that's pretty much it. So today left a ton of money on the table. Fortunate to get to take a trade on a day that I was really worried we weren't going to be able to. Got a nice big move. We had several trade opportunities today that made a lot of good sense to us, that worked out perfectly. And yeah, you should learn how to spot these things. And the best way to learn is by consuming material that I give to you both for free, i.e. these YouTube videos, or if you want to be in our Discord community, well, you can join. There is links down below, or you can buy my book, where you can learn from there. Or you can combine all three of them and pick up all the tidbits of information that I've come to learn about the market, probabilities. A lot of what I do is based off probabilities. It's not feelings, although feelings always play a role, unfortunately, in trading. But when you have the power of probabilities on your side, it tends to make you feel, or it should make you feel, a lot more comfortable. All right. But if you got any useful information in this video, please like, share, and subscribe. If you'd like to join our Discord community, well, as I said before, there are links down below. We'd love to have you. And I hope you guys crushed it in the market today. If you didn't, I'm sorry. If you didn't take any trades today, it's understandable. But if you made money, good job. Till tomorrow, I love you guys. See you.